to welcome everyone and also clarify that we are in a kind of transition period in terms of, our usual structure for these monthly meetings with a large membership of the African Institute. So these meetings will stay with the same frequency on a monthly basis and will be focused primarily on facilitating networks, both within our community, Western, but also globally. And that's why we are pleased to have our colleague, Professor George Okello Kandia Bongomin from Makerere University in Kampala, Uganda. And I realized that, the time adjustments that has not happened yet in London, he will, I think this weekend, has made the time difference between Ontario, the Eastern Coast, and Uganda 1 hour less, I think. Anyway, so George, welcome to our board meetings. I also want to clarify that we are in the process to finalize a smaller group for an advisory board with colleagues, one representative from each of the faculties who basically support the African Institute, and we will communicate the final list of names for this smaller advisory group very shortly. And this was in line with one of the recommendations made by the committee evaluating our renewal, which was successful, as you are aware, to have a smaller group of scholars from each of the faculties at Western for more type of strategic discussions. Having said that, we will keep very much our inclusive approach in terms of engaging, the large group of members that we have, expanded to over the last few years, as we have over, I think, 60 members from all the Western faculties. And especially we will keep the interfaculty or transdisciplinary nature of the African Institute. So I just want to clarify that beforehand. So welcome to everyone. I'm pleased to see also Elise Nové. I've not seen Elise for a while. So welcome back, Elise. Do you want to say a few words just to say hi?
Thank you. Hi, sabbatical was amazing.
Good. I'm always the same. I did not have hair 2 years ago. I'm still bald. So besides the jokes, but I've seen David and Holsworth as well. Okay, I see that there is also. Hey, David, do you want to say a few words?
No, I'm just saying.
Before I forget, and David, if you don't mind, because I received a message from Melanie about the Frugal Biomedical Innovation Program got funded to train graduate students from Anta Diop University in Senegal and University of Rwanda. Can you say just a few words about that? And then we will start with the presentation from George, please.
I suspect either Melanie or Margaret has more accurate information.
Yeah.
Hi, Severia. I can weigh in a little bit on that.
Please.
The information's under embargo at the moment,
Okay.
so we can't speak broadly about it in terms of a formal announcement. But you are correct. There has been some funding awarded, and we'll be able to make a larger announcement hopefully soon.
Okay, I'm sorry for I just received a message from
No worries.
Melanie. So I was just the messenger of passing the message. Okay, let's then start with the presentation from our colleague from the Makerere University in Uganda. George, would you like to introduce yourself? You have a very long biography. Obviously, You are professor of finance in the business school at the Makerere University in Uganda. So would you like to say a few words about your background, and then you can start with your presentation as well.
Yeah, thank you very much. Yeah, from the biography that I shared with you, yes, I'm a professor of finance, and I've been doing a lot of work, of course, around the area of financial inclusion that actually addresses goal number 1 of the SDGs. This has actually been so important because you find that most of the households that resides in the rural areas in sub-Saharan Africa still do not have access to finance. So most of my research has been around this area. And of course, I've also done quite a number of consultancy within the rural areas in sub-Saharan Africa, as you can see from my biography. So briefly, that is what I do. And also I have collaboration in universities in North America, like at Laval University, and also in Europe and in Scandinavian region and generally in Africa. Thank you very much.
George, you can start with sharing your slides, if you have slides to share.
I would like to share the slides. I was not being given the opportunity to share the slides. So let me check again. All right. So is it visible?
Yes.
Yeah, probably you tell me if it is stuck. Sometimes because of slow network, internet connectivity, the slides might have some kind of lapse as I try to present. So members, good afternoon, good morning, and good evening, wherever we are. Thank you very much for making time to come to attend this presentation. I would like to thank the organizers of this presentation and then the meeting, the advisory board meeting, for giving me the opportunity to make a presentation on one of the key issues that are affecting the rural population in Africa. I want to thank the director. I want also to thank the deputy director at the African Institute at Western University. So briefly, I would like to make a presentation on one of the key issues that is affecting the rural communities in Africa. And this is basically on access to financial services. So this study was conducted in one of the rural areas in southwestern Uganda. And we're trying to see how making mobile money financial services work for unbanked individuals in rural Africa, leveraging on network interoperability to drive digital financial inclusion sustainability in rural Uganda. Briefly, this is the outline of the presentation. We shall look at the background, the motivation, methodology, findings, implication, and some of the limitations to the study that we conducted. Of course, we know that currently we have the 17 Sustainable Development Goals set by United Nations, focusing mainly on leaving no one behind by the year 2030. Now, this has been carved out of seeing that majority of the population that live in rural Africa and other parts of the world are actually pulled out of poverty. Now, this is actually hinged on goal number 1 of the SDGs. Now, the focus is that by the year 2030, half of the population in developing countries should actually move out of poverty. And one of the key issues there is to make finance accessible to this kind of population. So this is because, one, if this population have access to cheap finance, they are economically and socially empowered. Now, the access to finance helps them to start up micro, small, medium enterprises. Now, this helped them, one, to smooth consumption, two, to have access to medical services, three, to also build some kind of asset for the households. However, you will still see that when you look at the global financial inclusion database that has been collected through the global index, you see that the level of financial inclusion still remains low. Now, this is basically because you find that most of the formal financial institutions have a lot of requirements, including collateral, to lend to poor individuals that seek loan from them. Now, this also is combined with the other price and non-price barriers that has also led to voluntary and involuntary exclusion. Now, when you look at Africa, from the latest the Global Index survey that was done in 2021, you find that still over 68% of adults who live in rural areas do not have access to formal accounts from financial institutions. And specifically in Uganda, you will see that only about 72, actually over 72% of adults do not still have access to financial services. Now, when you look at this global perspective, you will see that from the data that was comprehensive and collected from over 140 economies, you will see that about 1.7 billion adults still do not have access to accounts. Now, this means that it limits their ability to actually economically engage in activities that can move them out of poverty. Now, when you look at the overview from this maps the global aspect of the financial inclusion based on the number of accounts, you still see that when you look at Africa, you see that about almost 100 million people are still out of ownership of accounts. And when you look at the bigger dots, you see that the sizes increases based on the lack of access to financial services. Now, you will see that due to development and innovation, like adoption of mobile money through the fintech technology or the fintech evolution, you find that about 69% of adults around the world now have accounts, meaning that adoption of technologies that can help individuals that live far away in dispersed geographical areas to access financial services can actually promote access to financial services. Now, when you look at this global perspective, based on the different colors, you see that this is a spread out of number of individuals that are now owning accounts based on use of mobile phones. Now, this is basically account ownership rates across the different parts of the world. Now, when you look at the different colors, they are trying to depict the different regions across the world and the account ownership of the different individuals. Now, focusing mostly on Africa, you see that the use of digital financial services is really escalating access to financial services. Now, when you look at the color, we have between 64 to 89% of the individuals being able to use or to access financial services through their mobile phones. Now, this is the overview of the mobile money accounts that are spread out in Sub-Saharan Africa since 2014. And of course, this has been this overview has been obtained from the Global Financial Inclusion Index that is done after every 5 years. So we can clearly see that from 2014 to 2017, there is that kind of growth in the use of mobile phones to access financial services. Now, moving forward, you can see that globally, about 70% of adults have internet connectivity because the mobile money providers and then the banks have to work together because the banks provide the financial services that are accessed through mobile phones. So this is some kind of global perspective of internet accessibility that creates some kind of interface between the different mobile kind of banking, including mobile phones that are owned by individuals. And from this, of course, because of wide internet connectivity, currently, you see that about 70% of adults now can use their phones that are interconnected with the internet to access financial services. Now, briefly, this is an overview of mobile money account transaction. So we clearly see the impact that mobile money can actually create in access and then use of financial services. Because one, you see that over 90% of the unbanked individuals in developing countries, of course, especially the poor individuals, own mobile phones. And then the use of mobile phones to access financial services. One, provide some kind of convenience. Two, these individuals can transact over the mobile phone with safety. And then also it promotes some kind of efficiency. And all these reduces what we call the transaction cost that would have been incurred by the individuals to access financial services from the conventional banking system. Now, when you look at the global overview of the use of mobile money, you'll find that about 1.75 billion registered accounts that is processing over about 1.4 trillion a year, which is, of course, equivalent to about 2.7 million every minute that is transacted over the mobile phone. This clearly shows us that we need to look into the potential that is actually presented through the use of the digital mobile handset like the phones to access financial services. Now, from the latest index, you see that the use of mobile phones has actually increased access to financial services through account ownership by 50%. That is between 2011 to 2021, spanning, of course, a difference of 10 years. Then again, also, when you look at the global perspective from the adults, of course, we measure access to financial services based on the age, which is based on adulthood of an individual. So currently, you see that about 76% of adults worldwide are now able to access financial services using their handset, mobile handset. Now, in Sub-Saharan Africa, over 39% of mobile money account holders are now able to actually transact over the mobile phones, meaning that they can, one, save money, they can make payments, and of course, receive, transfer, and send money to different relatives and then different, of course, household members. Now, in Uganda, the use of mobile money has actually increased access to financial services by 30%. That is based on the latest index, data. Now, this clearly shows us that mobile money can actually increase access to financial services that can be used by the poor to come out of poverty. Now, this is an overview of a registered and active 30-day mobile money account between 2022-2023. We can clearly see that there is already some kind of increase in the number of registered accounts. This is on a 30-day basis, meaning that about $435 million are actually transacted over a period of 30 days through mobile money. Now, however, because of the use of mobile phones to access financial services, we still see that there is a problem of network failure and connectivity. You find that since the interest is to move the unbanked people into financial access through mobile phones, there is a problem of network interference and failure. Therefore, you find that globally, about 25% of daily transactions suffer from poor network connectivity. Now, in Africa, over 20% of daily transactions suffer from poor network connectivity. And contextually, in Uganda, about 18% of the daily transactions that could have actually carved in the poor people into access to financial services suffer from network problem. So briefly, this is the motivation of our study. One, this study has been motivated by looking at how network interruptions and poor coverage remains considerably poor in most of the rural regions in Africa. Again, when you look at the number of bank branches vis-a-vis the mobile money agents spread out, you find that currently, especially like in Uganda, about 41,794 mobile money agents are in existence compared to about 477 bank branches, meaning that the widespread kind of networks for agents can actually offer a better access to financial services. Again, one of the key issues here is that we want to test and see how network interoperability can increase the size of mobile money that can be received and transferred between the different users. Again, also, this study has been motivated by the urge to look at how interoperability can allow what we call mobile money account-to-account inter-network transfers. Now, this is very critical because you find that some of the poor people who live in rural areas have relatives that are living in the cities and in the towns, and of course, outside the country. So this, in a way, promote what we call remittances. So access to remittances through the mobile phones can also boost financial inclusion. Again, we also want to see how interoperability between the mobile money accounts and banks through interconnectivity can boost, how it can boost financial inclusion. So briefly, this is how interoperability system works. This is the mobile money interoperability system. Now, our main interest is to test the interaction effect between the mobile money interoperability system to see how they are interconnected with the banking system to ensure that there is some kind of digital financial inclusion sustainability. Now, from this brief overview, you can see that we have Bank A and we have Bank B. Now, we have what we call the central hub. Now, this central hub acts as a platform that actually interconnects the supply and then the demand for money that is transacted through the mobile phone. So it creates some kind of interconnectivity between the banking system and then the people who provide the mobile money to the users, to the different users. Now, this is some kind of the mobile money interoperability technical hub. Now, within the technical hub, we have what we call the clearing house. Now, this clearing house for the settlement involves the bank and then the mobile money providers and then the third party who are the mobile money users. So in this kind of technical hub, we have the sending and then the receiving of the mobile money. So we have what we call the technical hub where the interconnectivity and interoperability takes place to ensure that the supply and the demand of mobile money can be strived between the mobile money providers and, of course, the banks. Now, the settlement ensures that the poor who use mobile phones to access financial services are actually in a better position to always have access. Now, interoperability creates some kind of a platform where the mobile money users can easily transact over the mobile phones within the mobile money ecosystem. So briefly, we used a cross-sectional research design. Of course, this helped us to collect data at one point in time. And then we used a semi-structured questionnaire with 5-point Likert scale to elicit responses from the respondents. And geographically, this study was conducted in southwestern Uganda, in Kabale district. And our main respondents were drawn from the women, micro and small medium enterprises. Why? Because we were trying to look at issues of gender divide to see that there are more women who are included into the digital or fintech to access financial services. And of course, we use simple random sampling method, and we received about 306 responses. And these responses were analyzed using analysis of moment structures to test, of course, the different hypotheses that we have set under this study. Now, briefly, these are the main findings. One, we see that the inclusion of interoperability between the systems, that is, between the mobile money operators and then the banks, can actually boost or increase the use of mobile money and actually, hence, leading to digital financial inclusion. Now, when we integrate interoperability, as we've seen from the technical hub, you will see that about 10% of these individuals, there's increase in access to financial services by these individuals. So it is meaning that interoperability causes a 10 percentage point increase on the level of digital financial inclusion. Again, when you look at, of course, the impact of mobile money on digital financial inclusion, you will see that the use of mobile phones that actually allow the rural population to remotely access financial services has a positive impact on digital financial inclusion. And this is, of course, significant. And then, when we look at the impact or the effect of interoperability on digital financial inclusion, you will see that this has some kind of positive effect, meaning that if systems are interconnected, many poor people can be financially included through the digital platform or through the mobile money ecosystem. So when you combine, of course, the use of mobile phones and then the interoperability, you will find that this explains about 42% of the variation in digital financial inclusion and sustainability within the rural areas. Now, these are some of the implications from our study. One, policy should look into issues of interoperability between the mobile network providers or the network operators, the banks and other stakeholders within the mobile money ecosystem. Meaning that there should be laws or regulations that promote efficiency between the different stakeholders within the mobile money ecosystem. Again, our findings can also be used by policy to look into issues of consumer protection to attract many users, of course, onto the mobile money ecosystem. Meaning that issues of frauds over the mobile phones should actually be looked into, and the laws that are actually in place to protect the users should be strongly implemented. Again, when you look at the issue of data and data protection on the use of the digital financial services, the policy should see into it that the data protection law is enforced to see that the data of these users are not misused, because it can be used as a source of defrauding of the users. And then also our findings can be useful to telecom companies because it can help them to acquire modern equipment and data systems that can support interconnectivity to enhance digital financial inclusion sustainability. Again, also, you know that there has been argument that the fees on use of mobile phones are actually not uniform. So this kind of findings can also help policy in Africa to revisit the fees that are charged on different products that are provided through the mobile phones. And then, of course, we see into it that this kind of study can bring forth the issue of digital literacy. You find that most of the unbanked population in Africa are people who are illiterate. They can't read and write. So meaning that policy should look into issues of digital literacy and then digital financial literacy to enable the users to make borrowing decisions over the mobile phones. Of course, our study has been derived from or guided by a theory. So theoretically, from the academic perspective, this study can help to integrate the theory of interoperability into the digital financial inclusion ecosystem. So briefly, these are some of the implications that we derive from our study. Now, what are some of the shortcomings from our studies? One, this data was collected only from southwestern Uganda in Kabale district, which is not only a rural place in Uganda, meaning that the data excludes other rural population who remains unbanked in Uganda. Again, of course, our data was collected from the women, micro, small, medium enterprises, although this was, of course, not integrated. So the other gender, which is the male and the male section of the population who are engaged in micro, small enterprises were left out. Now, when you look at our sample, of course, the sample is small, so the generalization of these findings, of course, cannot be extended to other population, so making it difficult to generalize our findings due to the small sample. Then methodologically, you see that we use cross-sectional study design. Now, further studies can, of course, use experimental design, RCT, to investigate the behavior of this unbanked rural population as far as use of mobile phones to access financial services is concerned. Now, when you look at this overview, this is the interoperability stakeholders kind of overview that brings together the different players within the mobile money ecosystem. Of course, we have the mobile network providers or the operators. We have like the Airtel, MTN, and the rest that provides the mobile money financial services. And these are interlinked to commercial banks and then other financial institutions from the different tiers in Uganda. Now we see that we have the commercial banks that are actually, they have accounts that are interlinked with the mobile network operators. Also, we have, when you move forward, we have what we call the microfinance deposit-taking institution. Now, these ones have also embraced the use of course, online banking, and they are actually providing some kind of interconnectivity between the mobile money accessibility points and then, of course, the banks. Now, you will find that the integration of the microfinance deposit-taking institution becomes very critical because these are, of course, credited to the areas which are actually not covered by the conventional commercial banks. So you'll find that the microfinance deposit-taking institution have also embraced some kind of online banking to see that there's interconnectivity between mobile money and then, of course, the banking to access financial services. Now, these are our conclusions. One, we see into it that one, universal financial inclusion continues to remain a contentious subject under the SDG agenda of halving or reducing global poverty by half by the year 2030. Of course, you will see that there's still need for concerted efforts from both the demand side and then the supply side to scale up access to financial services, especially in Africa by the year 2030, which is barely about 6 years away from now. So we ask ourselves that shall we be there to pull our people out of poverty? That is a major question. Then, keenly, we need to see and provide strategies of reducing price and non-price barriers. Of course, this could be hinged on strong and reliable institutional framework for contract enforcement, especially in Africa. Of course, you know that in most parts of Africa, the laws that governs contract enforcement are not uniformly actually implemented. So this remains a critical area. And then, of course, lastly, there's great need for holistic kind of financial inclusion framework and an inclusive and collaborative financial inclusion task force that can actually drive access to financial services by the unbanked poor households in Africa. So briefly, members, this is the presentation that I prepared for this meeting. I would like to thank everybody for listening and then wish you a successful first advisory board meeting. Thank you very much, and everybody is welcome for open discussion. Thank you.
Thank you very much, George, for this beautiful presentation and all the work you have done in the field. So I will like to open the floor for questions and comments. I see many colleagues, especially from finance. So perhaps they will have comments or questions for you.
Thank you very much.
If you can also stop sharing your slides, please.
All right. Okay.
Elise.
Yes. Hello. Thank you so much, George, for that presentation. And I'm amongst those for whom this is a relatively new topic. I'm an anthropologist and I work in health and very much at the community level, where sometimes there are no phones and there are very limited literacy levels. So I wanted to hear a bit more about the digital literacy piece that you mentioned and how that constitutes one of the challenges that goes hand in hand with the financial inclusion goals in Uganda and beyond Uganda. And just, is this something that your team is thinking of working on? And if so, where are the points that you're going to be addressing that? Thank you.
Welcome. Thank you. So should I wait for all the questions or I can respond to this?
No. Go ahead with
Thank you very much. So thank you very much. This is a beautiful question. So what is happening is that currently through the central bank, there is some kind of a countrywide rollout of financial literacy. Now, in the process of rolling out financial literacy, now the digital component has been integrated into this. That is one approach. Then two, what is also happening is that there is some kind of introduction of financial and digital literacy now that has been integrated into the curriculum at the high school. Now, of course, this is just through some kind of pilots. Now, being guided by the current policy, there should be some kind of revision or amendment of the laws that actually can allow the rollout of digital and financial literacy at schools. Then also, of course, at the university level, you find that from the business school aspects, and then of course, from the social science aspect, there's some kind of approach of integrating digital literacy. And of course, that goes now hand in hand with the financial literacy among the university students. Now, one of the key reasons here is that there has been, of course, very high level of frauds that has affected the enrollment of many people, especially, of course, those who cannot read and write from the rural areas to use mobile phones to access financial services. So all this put together actually tries to now put policy to ensure that some of these approaches are actually tackled as soon as possible. Because if not, you find that the high level of access to financial services that has been achieved through digital financial services like mobile phones, mobile money can actually be affected. So the potential of access to and usage of financial services through a digital platform like mobile phones can actually be realized if this can be quickly implemented by the government. So basically, this is what is happening, or the complete picture of what is happening in Uganda. Thank you very much.
Thank you so much.
Elise is an anthropologist, professor of global health in the Faculty of Health Sciences. We have Dr. Kandala now. If you can introduce yourself, Kandala, also mention your research interest, please.
Yeah, good morning, good afternoon. So yeah, this was a very interesting topic. I'm Ngianga Bakwin Kandala. I'm a professor of biostatistics, but also interested in, in global health, basically. So the topic is really very, very important, and thank you for sharing this result. As you mentioned, this is really a very important study, but you mentioned also the limitation. I just wanted maybe to ask one or two questions. The first one is a statistician, so I just wanted to know, you mentioned that the financial inclusion has been most of the data you have looked there has been explained only 40%. Can you, the model has, a variance of 40%. Can you speculate a little bit about what about the 60% remaining? Do you think that where can we find that? Is it at the contextual level of the government? Which level that we'll be able to know more about financial inclusion? And looking also at the benchmark of 2030, as you have mentioned, is becoming closer and closer. So that may not be realistic. Can we look at a historical perspective, for example, to see in terms of those who are in epidemiology or demography, we see, for example, the demographic transition. We can compare the model of Japan compared to that of India, compared to that of Europe. So, and is this the correct route for Africa? What do we think that financial inclusion, looking at this way, will uplift the population of Africa? Whether can we compare models? So that is really what I wanted to ask for now. Thank you.
All right, thank you very much, Prof. Of course, when you look at the 42% variation, of course, in the level of financial inclusion. Now, when you're doing a study, there are different factors that affect, of course, the outcome variable. That is the exogenous variable, the endogenous variable, meaning that the 58% contextually can be explained by other factors. Now, we must know that in Africa, most of the activities and behavior, of course, are driven by culture. Now, you will find that not only probably the policy and then, of course, the legal framework and other aspects, but basically, when you look at how Africa and Africans do things, most of our activities are driven by culture, which is linked to the norms in the society. So briefly, we can say that the 58% of the remaining bits that explain financial inclusion could be originating from different factors. Now, coming to the issue of the benchmark of the 2030, you will see that, of course, you know that the SDG originated initially from the Millennium Development Goals. Now we have the SDGs, of course, set at a deadline of 2030. Now, you will see that, one, this issue of mobile money, the use of mobile phones to get money or to receive and send money, originated from Kenya, which was in Africa, and this had to spread to the other parts of Africa as a continent. Now, linking this to the other developed economies that probably use the other mode of banking, like on mobile or internet banking, you will, of course, need a lot to be done. One, there's need to transition, and this requires the change in behavior and, of course, availability of the technology to the unbanked rural poor population, because this is the main issue of the current interest of the SDG, to move them out of poverty. So when you look at, of course, the previous, you're talking about the historical data, you will see that the fintech is a new kind of evolution. So getting data that clearly shows the trend in access or use of some of these technologies to access financial services could be difficult. So this takes us back that the different institutions need to work together to actually find a better or strike a balance towards improving access to financial services through this new technology, like the mobile phones, use of mobile phones to access financial services. So probably this is the way how I can really see that the Sustainable Development Goals, of course, the United Nations and then the World Bank and the rest need to, of course, see the best possible ways of how to improve technology adoption and, of course, transfer into Africa. Thank you very much.
Thank you.
Dr. Ojendi, do you have a question? Because I see you are.
Thank you. I don't have a question, Professor. I just want to thank Professor Okello for such brilliant presentation.
Can you introduce yourself, please, to our colleagues?
My name is Japheth Ogendi. I'm talking from University of Rwanda at the moment. I just want to thank Professor Okello for such very brilliant presentations. And I realized when he was talking that he's talking about financial issues. And I was saying I have no capacity to address, but when he touched on things to do with the reduction of poverty, I realized that we have a coincidence that we can look at those things together, because anything that addresses poverty reduction also affects directly the health of populations. So that's why I find the topic that has been chosen by Professor Okello very relevant even to me. In most countries, Kenya, Uganda, and even Rwanda, where I am, the disparities in terms of income are important, and any effort, any banking system that can address this, I think is welcome, not only in terms of income, but also in terms of health. So I think I just want to say that I am happy, and that's what I wanted to say. Thank you very much.
Welcome. Thank you for the compliments.
Any additional questions or comments from our colleagues? Elie, I'm sure you have questions. I see let's start with...
I know, thank you very much, Averio. I know a little bit about the paper since I'm working on it with George, and I'm very happy that he has the opportunity to present it here, and that we will get from colleagues who they will definitely help to improve the paper. I just want to build on what our colleague from Rwanda just said. Poverty reduction is a sensitive issue in Africa. Because as you know, we have a lot of countries in Africa that are very poor. and the African government as well as the international institutions are very, very involved in all type of projects to help for poverty alleviation. And this paper, posits itself as a contribution, helping decision maker to think more about it. So, at the end of this paper, we would like to, come with some idea that can be shared with decision maker at different level to see if this idea can help them to, reduce poverty. So I'm very happy with what I'm been hearing here today. The comment that, colleague Elise, the other one, I forgot his name, and, Professor Kandala also shared here, that will definitely help. Actually, we will go back to, Professor Kandala to ask his advice, because the question he asked, about the 60% that was explained in the model is a very important question. And we will go back to him to ask some advice about how to handle. So, well, thank you very much. Thank you all for your comment. And if you have any other comment or more questions, feel free to go ahead and ask this question and share with us the comment. And we will use this comment to improve the paper. But thank you very much, and thank you, Saverio. Thank you so much. Yeah.
Of course.
And Professor Okello, thank you very much. I'm very happy that you have the opportunity to do this presentation. We have been talking about this for a while, and I'm very happy that Professor Melania, Kativo, has made this possible, and I'm very happy about it. Thank you, George, for this presentation. Yeah.
Thank you very much for the compliments.
I see Pauline with a raised hand. If you can introduce yourself, please, and make your question or comment.
Greetings. And first, I'd like to register my apologies. I'm not able to turn on my camera today. I'm actually experiencing power outage, so I'm in the dark. But next time, I'll make sure that I have a backup plan. So anyway, my name is Pauline Akot from University of Nairobi. I'm a lecturer at the University of Nairobi. Then apart from that, my background is in project management and monitoring and evaluation. So around 4 weeks ago, I was engaged in an evaluation in the border of Kenya and Uganda, that is Malaba, and also at a place called Tororo. So this is a very interesting topic because it's resonating with my experience that time. So the end-term evaluation was on women cross-border traders. And one of the issues that was coming up is that initially, in the cross-border trade, a lot of women used to use illegal routes and also smuggle goods because they never understood the importance of formalizing their businesses. So KRA and an organization by Trademark Africa took an opportunity of looking for these traders from the markets and sensitizing them on the importance of formalizing their businesses, and also they were sensitized on customs and also financial inclusion and literacy, and they realized that it was very easy to cross. But when we were conducting the evaluation, especially the qualitative evaluation, one of the aspects that came up was on inclusion, that is accessing loans and funds from banks and also other organized financial institutions. And one of the issues that was coming up from the women was that initially they normally view banks and other financial institutions as high-end entities that it is beyond their reach. So that is why they were opting for using Shylocks, and some of them, especially in Kenya, also because Kenya, most of the citizens already have mobile phones, smartphones, so they can access mobile money from that. That is, the loans that you can just access via an app. But now, one of the key issues that was also coming up was that these women initially were not trained on how to manage their businesses. So you find that they didn't know how to calculate profit. So once someone sold things, they could just spend the money. They didn't know what they were making, whether they're making losses or not. And one thing that also drove them away was that when they were accessing loans from mobile apps, at times when they defaulted, like for a few days, because, you know, for the mobile app, there's no face. So when they are requesting for the loans, it normally takes all their data, and the people were calling them and harassing them. And also because they have access to the data and the contacts for the whole, I mean, for everyone in the contact list. So they were embarrassing them. And that was really making them now to fear accessing the loans. And now the aspect of using the formalized way of accessing grants and also loans for their businesses was not taking part. So one of the things also that we learned, especially on digital literacy and also financial literacy, and digital literacy as a whole, was that one of the recommendations we made that the financial institutions, in partnership with also the other, let's say they're called what? The cooperatives and all that, they come together when they're trainings to be able to train, especially traders, women, on how to ensure that when someone accesses loan, they're able to pay back on time, and also just put a face, because you find that most of the time when they're getting the loans from the apps, they assume maybe it's free money, because at the end of, I mean, in their mind, they're thinking that they are not liable, whether they pay it or not. There's no one who's seeing them. Then at the end of the day, it was really making them stressed and making them have mental issues. So it was something that was coming up, especially on uptake, and ensuring that that element of understanding, and because the default rate was also very high, and also mobile lenders were using that opportunity when they get the contacts from the clients. They were also, some people were also thrifty, using them for scaring tactics and all that. So it's a very interesting topic, which I believe, even taken further, it can include like the whole system to ensure that as much as we are supporting even the women, especially in the SMEs, and any relevant person as a whole, at the end of the day, it's very important to understand that for financial inclusion to be achieved, and also the target to be achieved, there is need of collective involvement from both financial institutions and also the citizens. Thank you very much, and over to you.
Thank you very much, Pauline, for your comments. George, would you like to add anything else? We have only 2 minutes left before ending the meeting by 2 p.m. Please.
Yes, thank you very much. I would like to add on what Pauline has said. What is happening also, you find that due to some kind of digital illiteracy, many of these digital lenders manipulate the borrowers, especially the women. And then also in the process, they actually hack into the data of these borrowers. So that in a way represents them with a lot of kind of risk. And this scares away, many more other borrowers to come and then take money through the digital platform. But of course, what is happening is that in Uganda, we have the actually UN funded institution that is actually rolling out a countrywide kind of financial and digital literacy, including both the youth and then the women into this kind of training. So you find that Enterprise Uganda, which is funded by United Nations, is trying actually to educate and also conduct digital and financial literacy to see that the use of mobile phones can actually become more efficient in accessing financial services. So briefly, that's what I can comment on. And I would like to thank everybody for their comments. We shall really get back to colleagues who have sent us some of the comments and then observation to see that we improve on this study, and then to see into it that policy can actually tap into this finding to improve on access to financial services through the mobile money ecosystem. So briefly, this is what I can say. And I would like to again thank the organizers and for giving me the opportunity to make this presentation in this forum. Thank you very much.
Well, thank you, George, for sharing your work with our African Institute community. I'm sure there will be follow-ups. We receive many positive feedback, and you know, the colleagues can be in contact with us or with you directly. So I will end the meeting here unless there are any additional questions or comments. So thanks again for your participation. We will be in touch with the next events and meetings of the African Institute.
Thank you very much. Thank you. Bye-bye. Thank you,
Bye-bye.
everybody.
Bye.